Well, in my last chart, I said I wasn't as confident that we were going to reach 2,800 on the S&P during this decline because we'd had a spike in the new highs minus new lows that looked indicative of a possible intermediate cycle low. But I guess I should have been more confident because we did reach that today. We've got a panic day. Um, But I'll say this again, this is not the end of the bull market, although we're going to have a lot of calls here in the next few days that people are going to be again calling the end of the bull market, just like they did in back in February. Uh, back here, everyone was telling us that the bull market was dead, and of course it wasn't dead. Um, you can see we came up and made new highs. But as I've said before, these extremely right translated intermediate cycles, they tend to crash at the end because they just run out of time. They're just uh, you have to the correction has to be compressed into a very short time frame. That's what happened over here. This lasted all of 2 weeks. I suspect the same thing is going to happen here. We're going to compress this into a very short time period, and then we'll get our bottom, and then I think we're going to be off um, towards that 10,000 mark or close to it in the NASDAQ. So um, I believe that this is the correction that will set up the move to 10,000 on the NASDAQ. So as you can see here, we've broken this intermediate trend line. So we've done the bare minimum to confirm an intermediate cycle low. That, of course, that doesn't mean that the bottom has to come today. I kind of doubt that it will. The S&P hasn't quite tagged the 200-day moving average just yet. It's a little below where we're at today. So I'm going to say we probably got a few more, at least 1 or 2 more days anyway. This was the recognition day that an intermediate cycle low had begun. You can see over here, this was the recognition day, and even though we did go lower, we were pretty close time-wise to the bottom, and then it wasn't long before we'd completely recovered this recognition day, and then we started the next intermediate rally. Well, 2018 has been a year of sideways. The market has basically gone nowhere. So I suspect the next year, 2019, once we finish this intermediate cycle low, I suspect we're going to come out of this bottom much more aggressively than how this intermediate cycle played out. And I suspect that this long sideways consolidation year is going to generate a very powerful move to the 4-year cycle top as we finish out the rest of this year and then move into 2019. All right, so a little bit longer term picture here. So you can see these long sideways markets are what generate these big trending moves. And 2018 has been just a long sideways nothing market. And so once we finish this intermediate cycle low, I think that 2019 is going to generate another big trending move, and probably one much more aggressive than the move in 2017. And that's going to give us the top of this 4-year cycle. And that 4-year cycle started here at the bottom in 2016. So I think that's what's happening here. 2018 is a sideways, go nowhere market that is consolidating this big move up from the 4-year cycle low in 2016. And once we're done, then I think we've got another big aggressive move higher, similar to or even more aggressive than this move here, into a final top in, well, a 4-year cycle top in 2019. The bull market, I think, still has many years to run, maybe as many as 10, 12, 15 years yet to go before the secular bull market is done. But we're going to have another 4-year cycle low come due in 2020. So I think 2019, we're going to see the top of this 4-year cycle. And then I think we're going to have a recession and a really at least a cyclical bear market in the stock market. And by that, I mean at least a 20% drop into the 4-year cycle low in 2020.